How to make round 1 decisions in the CAPSIM simulation. Hello and welcome to today's comprehensive lecture on how to make optimal decisions in round 1 of the CAPSIM Capstone simulation. I'm your instructor, and in the next 30 to 40 minutes, I will walk you through every functional area of your simulated company, including R&D, marketing, production, and finance, and demonstrate how to make decisions that balance strategy, data analysis, and business logic. Our goal for this first round is to position our products effectively in each market segment, invest wisely, and lay a solid foundation for long-term profitability. This is an essential round. It sets the tone for the rest of the game. Let's begin. Part 1: Understanding the reports, segment buying criteria, 045. Before you make any decisions, you must study the industry conditions report and customer buying criteria. These reports reveal what customers in each market segment truly value, in other words, how they decide which products to buy. Let's look at the traditional segment first. This is where our product Able competes. In this segment, age carries 47% importance, price is 23%, ideal positioning is 21%, and reliability, measured by MTBF, is 9%. In contrast, the high-end segment, where product Adam competes, values, ideal positioning the most at 43%, age at 29%, MTBF at 19%, and price only 9%. Each segment has a unique mix. Performance values reliability and positioning more, while low-end focuses on price and age. The key takeaway? Do not make random decisions. Always align your product specs with what your customers want. Part 2: Research and Development, R&D, Decisions, 215. R&D is where you control your product specifications. You define performance, which increases over time, size, which decreases over time, reliability, measured as mean time before failure, MTBF. Let's go segment by segment. Small Blue Diamond product, Able, traditional segment target performance, 6.0, target size, 14.0 MTBF. Keep current. These values are centered in the traditional segment's ideal circle for round 1, giving a strong appeal without excessive R&D costs. Small Blue Diamond product, EA, low-end segment. Leave specifications unchanged in round 1. Why? Low-end customers care more about price and age, not specs. Small Blue Diamond product, Adam, high-end segment target performance, 8.9 target size, 11.1 MTBF. Keep current. We aim to stay within the ideal high-end segment circle while avoiding overinvestment in unnecessary reliability. Small Blue Diamond product, AF, performance segment target performance, 10.3 target size, 14.7 MTBF. Keep unchanged. High performance is essential here. Notice we're not increasing MTBF yet, we'll manage costs for now. Small Blue Diamond product, a gap, size segment target performance, 4.7 target size, 10.0. A gap needs to move deeper into the size segment. Again, no changes to MTBF this round. Recalculate after every product change. Make sure your R&D projects finish before the start of next year so your new specs are available for sale. Part 3: Marketing Decisions. In marketing, you'll make decisions in 4 areas: 1. Price, 2. Promotion budget, 3. Sales budget, 4. Sales forecast. Let's walk through each. Small Orange Diamond pricing strategy. Set your prices within the expected range for each segment. Here's our plan: Able, traditional $27.50 VA, low-end $20 Adam, high-end $37 AF, performance $32 a gap, size $32. This pricing is competitive and aligned with customer expectations from the industry report. Small Orange Diamond promotion and sales budget. We want to maximize awareness and accessibility. The standard strategy for round 1 is promotion budget, $2,000 per product, sales budget, $2,000 per product. You can type $2,000 in each field. This means $2 million. You don't need to overspend in round 1. A consistent investment of $2,000 in both areas builds up over time. Small orange diamond sales forecasting. This is a critical part of the simulation and the one most students struggle with. Forecast the number of units you believe you can sell in round 1, able, 1,650 units VA, 2,300 units ATOM, 670 units VF, 650 units VGAP, 567 units. These are starting forecasts. As the game progresses, you'll base these on market share estimates and past performance. Click Recalculate to see the updated contribution margins and marketing effectiveness. Part 4. Production decisions. Your production decisions should align with your sales forecasts. Small orange diamond units to produce. Match your forecasts, with a slight buffer to avoid stockouts. Able, 1,500 units VA, 2,290 units ATOM, 640 units AF, 600 units VGAP, 510 units. Small orange diamond capacity and automation. This is where you invest in long-term efficiency. Let's increase our automation levels. Increase Able and EA automation to 6 and 7 respectively. Purchase 200 additional capacity units for 1 or 2 key products. Why automation? It reduces labor cost over time. But be careful, high automation increases revision time in R&D. Use your investment funds wisely. Do not exceed your maximum spending limit, typically around $32 million in round 1. Part 5. Human resources. In round 1, the HR module may be disabled. If it is, skip it. If it's active, do not invest in training or recruiting spend yet, wait for round 2 or 3. Focus on building a financial base first. Part 6. Finance decisions. Now let's make sure we have enough funding to cover all those investments. Start by checking your pro forma income statement and the balance scorecard. Notice, if you've invested heavily in R&D, capacity, and automation, your cash flow will be negative. So you need to raise funds. Small orange diamond. Raise capital via current debt, long-term debt, stock issue. Here's a simple plan. Take current debt, $5,000, low risk, long-term bond, $10,000. Issue stock, $1,884. We don't want to run out of cash. Our goal is to maintain a healthy cash balance, ideally at least $10,000 to $20,000 by year-end. Also, avoid repurchasing stock or paying dividends this round. Retain earnings and focus on growth. Part 7. Reviewing the balance scorecard. Before you submit, review your balanced scorecard. It's a key metric that captures overall company performance, including financials, internal processes, customer, learning, and growth. In this sample case, after all decisions, we achieved a score of 56.6. That's a strong start. Also review your projected December cash position, income statement, and total investment. Make sure you haven't over-leveraged the company. Final tips before submission. Let me summarize the round 1 winning principles. 1. Always base product updates on segment criteria. 2. Set prices near the middle of the expected range. 3. Keep promotion and sales budgets consistent at $2,000 each. 4. Use realistic sales forecasts based on expected market share. 5. Increase automation gradually, don't go above 7 in round 1. 6. Raise enough funds through debt and equity to maintain liquidity. 7. Double-check all numbers in the pro forma and balanced scorecard. 8. Do not worry if you don't make a profit in round 1, you're building for long-term gains. Remember, round 1 is about positioning, investing, and setting up future efficiency. You are planting seeds that will bear fruit in rounds 3, 4, and beyond. Closing. That concludes our walkthrough for round 1 in the CAPSIM Capstone simulation. I hope this session has clarified your strategic and operational decisions across all departments. In the next session, we'll tackle round 2 and learn how to adapt based on results, competitor moves, and market shifts. If you have any questions, feel free to comment below or join our discussion forum. Don't forget to save your decisions before the deadline, and always export your reports for future reference. Fastest support to get top results $9.99 for CAPSIM, email, behelp2002@gmail.com, blog, https://capsimguide2021.blogspot.com, free Excel file for all 8 rounds, download from blog or send the email, online quick support Q&A equals WhatsApp equals https://bit.ly/3silp9u. Whole game support equals $50 for 8 rounds equals top results. Thank you for joining, and best of luck in your first round. Let's build a winning strategy together.